Hi everyone, welcome to my channel. In this video, I'll be teaching about company accounts. I'll be doing separate videos for all these topics. These all topics cover the entire company accounts till forfeiture of the company. Okay, forfeiture is a very important chapter, but we need to know all about company accounts, everything else to understand what is forfeiture. So I'll be doing videos regarding all these. My first video, in this video I'll be teaching the introduction, format and an illustration of company accounts. Okay, basic of company accounts. The first is introduction. What is company? You know what is sole proprietorship company? You know what is partnership company? In sole proprietorship company, the proprietor will invest the capital to the business. In partnership, the partners together will invest the capital to the business. But in a company, a group of people, the public, will invest in the company, which will become the capital of the company. This company will sell shares to these public, and these public will purchase the shares, and that's how the company will get the capital to run its business. Okay, let's see. I'll give you a small visual representation. Okay, say this is a company. Okay, the company will send the prospectus. This is prospectus to the public. Okay, this prospectus contains everything of the company, everything that the public should need, may need to know about the company will be there in the prospectus of the company. Okay, this public, if interested in this company, will purchase the shares. To purchase the shares, the public should first send the application along with the application money. Application money to the company. Okay, if the company is interested in the subscription, when they purchase shares, when they send application and application money, it's called subscribing to the shares of the company. Okay, if the company is willing to accept, they may accept the application and application money of this public. Okay, so when the company accepts their application and application money, this public will become the shareholder of the company. Okay, this public will become shareholder of the company. That's not just one person, there are number of persons, number of public who may apply for the shares of the company. So this company may accept all these application money. That's how this public will become the shareholders of the company. Okay, since these public are investing or providing capital to the company, they are the owners of the company. In sole proprietorship, the sole proprietor is the owner of the company, of the business. Partnership, the partners together are the owners of the business. In company, in a joint stock company, the public, that is the shareholders who have purchased the shares of the company, are the owners of the company. Okay, these shareholders are called the owners of the company. So now you might be thinking, who, if these public are the owners of the company, who might do the management of the company? So the management of the company will be done by board of directors who are elected, board of directors who are elected by the shareholders, that is owners of the company. Because the whole public, there will be like hundreds of people who have subscribed, who have purchased the shares of the company. So not all of them can do the management. Okay, just like that, they cannot come do take care of the company. So these board of directors will do the management of the company. Okay, so let's see what are the accounting terms of all these. So before going to company accounts, you might need to know certain names. Okay, like authorized share capital. What is authorized share capital, issued capital and all. So let me explain what all these are. Authorized capital is the maximum amount of capital that a company needs to run its business. So this is the maximum amount of money that the company needs. So let's say 1 lakh is the authorized capital of a certain company. They may not issue the whole 1 lakh worth shares to the public. Okay, they may not issue these whole while issuing the while sending the prospectus or all to public. They may not issue the whole capital. They may issue a part of capital, that is, let's say 80,000 rupees. They have issued 80,000 rupees of shares, worth shares. The remaining will be the unissued capital, and not all the capital issued by the company will be purchased by the public. Like not like only a few of them have subscribed, okay, but the whole they have not all the public haven't subscribed for the total issued amount by the company. So they may let's say only 70,000 shares were subscribed by the public, remaining 10,000 were not subscribed. Okay, only few public offered to purchase the shares. So these 70,000 shares are subscribed by the public are called subscribed capital. Those unsubscribed by the public are called unsubscribed capital. And the company may ask for following set of monies. First, the application money, which is sent by the public voluntarily if they are interested after getting the prospectus of the company. So there is application money, and then the company may ask for allotment money to allot this public as shareholder of the company. And then after once this public becomes the shareholder of the company, they may ask for call monies, that is first call, that may be divided into first call, second call, final call, and so on. So the money asked by the which are asked by the company are called called up capital, and those which are not which the company haven't asked for it are called uncalled capital. And the money which are paid by the shareholders are called paid up capital. Not all the money will be paid. Few they may fail to pay some money. So they those which they fail to pay are called calls in arrears. They are yet to be paid by the public. That is by the shareholders. That is, the company may haven't called for the money yet. So calls in arrears, arrears, it is yet to be called. So paid up capital is amount paid by the shareholder, and calls in arrears which are not. So these uncalled capital will be taken as reserve capital, that is, which will be used at the time of dissolution of the company. When the company is winding up, they may use this reserve capital. Until then, it will not be touched. Okay, in most cases. Okay, let's see the journal entries. Okay, it's pretty much easy once you have known the concept of the company. So first, what happens? Journal entry. We need the format. I'm telling the format of the company accounts. The basic format. Okay, what is format of journal? Okay, which comes from date, particulars, LF, debit, and credit. Okay, and this first, what happens? First, application money is sent by the public. Okay, so when the application money is sent, what will be the journal? Bank account. Application money is received, right? Data to share application. Okay, this is the first journal. So the application money is sent. Amount received on application. Application. Okay, this is the first journal. once the company receives the application money, the company will transfer it to share capital, and that's when the public will become the shareholder of the company. So the company is transferring the amount, that is share application amount, they are transferring to share capital. So what happens? The public will become the shareholders of the company. In this, from this journal, the public has become the shareholder. Okay, so application money transferred. Okay, and then they may ask for allotment, right? We saw what all money they may ask. Okay, we saw application is done, and now application is received. The shareholder public has become the has made the shareholder. Now what? Allotment money. So when we receive allotment money, how much allotment money is to be received? That is share allotment account data to share capital. Okay, the application money is to be received. Okay, the amount due on allotment. Okay, now the call is made. The shareholder should pay the allotment money. So when the shareholder pays the allotment money, the journal will be bank account data to share. On which are they paying? They are paying allotment money. Sorry for that. Okay, now the allotment money is paid. Okay, so allotment money received. Now what? First call money, right? First call money also same thing. The first call money due amount will be share first call account data to what? The same thing. Okay, instead of allotment we are writing share, we are receiving first call. So share allotment to share capital account. So amount due on first call. Okay, then we'll receive the first call money, that is the same like this, like we received allotment money, that is bank account data to share first call account. So amount first call money received. Okay, now what is this? We have received first call money, now second and final call. So for second and final call the same thing, share first, second and final call account data to what? Share capital. Amount due on second and final call. Then when we receive second and final call, the same bank account data to share second and final call count. So second and final call money received. Okay, so let's see example sum. Okay, let's see the first example. Okay, Bharat Limited had an authorized capital of 4 lakh divided into shares of 100 each. It is offered to the public 3,000 shares payable as on application. So allotment 20, first call 25 and second call also 25. The shares were duly subscribed for by the public and all the money was received. Past journal. Okay, so we saw the format. So it's easy. The authorized capital of the company is 4 lakh. So we don't need that. We just need first we need how much the company has applied. So the company has applied for 30 rupees is application money, and it offered to the public and issued capital is 3,000, and all the shares were subscribed. So this whole 3,000 were subscribed by the public. So how much amount of money have we received for application? 3,000 into 30 rupees. The whole shares were subscribed. So the money for 3,000 shares were received. So when we received bank to share application, which is 3,000 into 30, that is 90,000. We received 90,000 rupees on application. So all the money were received. Okay, so all the 3,000 shares were allotted. So 90,000. So the whole 90,000 was transferred to share capital. So everyone becomes the shareholder in this. And now they've allotted the whole 3,000 shares, but the allotment money is 20 rupees. So the amount will be 3,000 into 20, which is 60,000. So 60,000 was also received. 60,000 was received. So here also 60,000. And then how much first call money are they supposed to pay? 25 into 3,000. So they are supposed to pay 70,000, 75,000. So the whole shareholders did pay 75,000. So 75,000 was received. And then second call also is 25. So 3,000 into 25. So the shareholders are supposed to pay 75,000 for second and final call, and they did pay 75,000. So in this also 75,000, and that's it. So we were asked to pass journal. So this is the journal. It's easy, right? Just know the format, how these journal were formed, and just enter the amount. That's it. So it's easy, right? So do subscribe to my channel and like my video if you've liked it, and wait for my next video.